Hey everyone, hope everything is going well. Happy New Year. It is January 2019. Been getting a lot of questions about penalties recently, and I figured I'd put this video together to help answer the difference between a fixed rate and a variable rate mortgage and how the penalties are calculated. Got a little dressed up for the new year and for this video. First off, variable rate mortgages. Traditionally, most variable rate mortgages are calculated as 3 months of interest. This is very, very easy. You take your mortgage amount, multiply that by the rate that you have on the mortgage, and that gives you the annual total interest. Divide that by 12 months, multiply that by 3, and that's your 3 months of interest penalty. That's pretty much the lowest you're going to get in terms of a penalty. For the fixed rates, it's quite complicated and very, very different compared to the variable. They do an IRD, and what that means is interest rate differential. By that, what I mean is they'll take the amount that you owe and factor that in, plus the time remaining, and also the rate at the time that you break your mortgage. I guess a simple way to put it, for example, if you have a mortgage rate of 4% and at a time of breakage, the current terms are significantly higher, that's actually a good thing, because that means the bank wants you to return the money so that they can take that money and lend it out to someone else at the higher interest rate. So in that situation, your penalty should be around 3 months of interest if you're lucky. However, where some of my clients in the past, if they had to break their term prior to the end or prior to the maturity of that term, and the rates at the time of breakage are significantly lower. Example, again, if your contract rate is 4% and when you break it, the new rates are 2%, that's not a good situation, because the bank does not want you to return that money, because they will have to go out and lend that money to someone else at significantly lower returns. They pass that interest rate difference all onto you. The worst example I've seen actually was a client that had $1 million mortgage and 1 year remaining. He wanted to break the mortgage, and on that $1 million mortgage, the penalty was $61,000. So definitely very, very different than 3 months of interest. And that's the difference between a fixed and a variable rate mortgage penalty. Give me a call. It does get a little bit complicated. I do get a lot of clients that ask how to calculate fixed rate penalty. Honestly, I try to print it up and to show you guys. It's not very clear, but that's the complicated calculation. So give me a call and I'll go through in more detail. Hope that helps, and if any questions, talk to you soon.